Welcome back everybody to another video. Today we are talking about swing trading, the run up into earnings. So first off, if you have not, please go ahead and do so, like this video and subscribe to the channel. It's all very much appreciated. So talking about the swing trading, the run up into earnings. So a lot of times stocks, in particular Apple, is pretty notorious for doing this. It likes to give itself a little run into earnings, and then it usually sells off for a couple days or two after earnings. That's just how it tends to do it. Where is an example? This one, it sold off in earnings. This one sold off. Here was a run up in earnings right here. A little push. And let's see, right here was a run up in earnings. Here was a run up in earnings. Okay, so the first thing you really want to do is you want to start planning about a month in advance. I would say more like a month and a half in advance. You really want to be starting to plan. You're going to be starting to look for stocks that you believe are beaten down, that could get some relief buyers going up into earnings. Some institutions wanting to take positions before earnings, hedge funds, that type of thing. So you're going to start planning about a month and a half. And if you see here, today is 7/14, so July 14th. About a month ago, we had a nice bottom, and even about a month. So this is now, 2 months. You had a nice another bottom, and these are great. 134 up down near 150 today. So for me, about a month and a half, you want to start looking, and at about a month before earnings, or a little more than that, around that time, you want to start looking to get long in names that tend to run up in earnings, right? So the next thing to be able to tell which stocks are going to actually do that, we go and we look at seasonality. Seasonality is much more applicable during bull markets. This year we're in a bear market right now, so it may be a little off, but it does tend to be still fairly accurate from what I've noticed. So it's July 17th, so we're looking for the sectors that are strong throughout July. Here's one: utilities, healthcare, consumer staples. Those are kind of our stocks that tend to do better. I would also add energy into that just for the current climate we're in. But this website called Equity Clock has these charts, and it's a really nice chart. You can look at commodities as well. I will link Equity Clock down in the bio below. So the first thing you want to do is you want to identify the level that you're going to risk off of. Just like any trade you ever make, the first thing you want to do is determine your risk. So in something like this, let's say we were buying down here, a level you could have risked off, maybe it was this low. Another one, maybe you were buying here and you just wanted to risk down to this candle, or maybe you wanted to risk all the way down to 125, whatever it is. You need to determine that risk and make sure you get that line on the chart. The next step would be to average in. Okay, so I like to trade options, so I will be averaging into these slowly, not just buying a bulk at it, not just buying all the contracts at a time. And so let's see. So and when you're buying the options, another thing that is really important, which we can talk about more in depth in another video, is how to pick the option strike. But basically you want to pick, so the earnings for Apple are on 7/28, so about 2 weeks from now, right? So 7/28, that's right here, that's about 15 days out. When choosing the option date, the expiration date, the large money, the big fish, the institutions, they like to go a week or two past earnings, right? So if we can even go in here and look. So this is 1 week past earnings, and you can see the volume in the money calls. Now if we go even a little bit further outside, we can see more. The volume's a little bit lower, but so now when it comes to picking the strike, I like to pick the strike. So let's say just for reference, we bought on this candle. Okay, we bought on that candle, and once it got back above this 132.50 level, I would be picking a level, the strike that is within reach, right? So that if I'm right, this contract is going to go in the money, maybe 1 or 2 strikes. That's what I like to trade. That's what I'm looking for. Those contracts tend to flip up the most, meaning the most percent gains on those contracts. So if it were me, I'm probably, and I would see this downtrend forming. So I'm thinking maybe it can get back to 145. So maybe I'm thinking a 145 strike, or um, if you want to do 150, that would be fine. That's a little bit higher and a little bit, if you were buying down here, and that's a little bit more unrealistic. Not that it can't hit it, but that it's just a little bit too far. So if you're going to do that, which is fine, you can choose the 150 strike, but I would, personally, I would choose more time on this, right? I would, instead of getting 29 days out, which was a week past earnings, I might get, August 26th, 43 days out. So it's just about buying more time just to be safer, on the safer side of things. And the last thing that I really like to do and that I believe is important is I like to take off at least half. Me personally, I take everything off right before earnings into that high implied volatility on the options contracts. When the options are all juiced and everyone's buying them because the Apple has earnings, that's when you're selling. That's when I personally like to sell my options into that hype. I would rather not take it all the way into earnings. As you know, you can get massive gap downs and you would get absolutely destroyed on something like that. So holding through in earnings is a gamble, especially if it's options. If it's common stock, it's a little bit different because you can, stop yourself out. But yes, it's very dangerous to swing all the way through the option. So I would never do that personally. That's not the way I like to play them. And I believe that is gambling. So thanks for watching this video. If you guys have any other questions or comments on the material, please drop it down in the comments below.